You should never trade this type of fair value gap. They are only there for one reason, which is manipulating people. I'll show you in this video what fair value gaps to avoid and what fair value gaps to enter off with confidence. If you appreciate my free content, then make sure to like, subscribe, and share this video with your friends. Let's get into it. Now, as you guys know, we deal with fair value gaps a lot, and most of the time, at least for me, it's my favorite PD array. I don't use order blocks that much, only fair value gaps and liquidity. This is all I trade with in different types and in different formations, right? But then what I notice is that a lot of people actually make mistakes and they trade the wrong fair value gaps, even though there is something that really tells you which fair value gap is going to be respected and which one is not valid no more. And the thing is liquidity, but we're going to go into this more and more in details, right? But the mistake that a lot of people actually make, let's consider that we have a bearish PD array here. So let's say a fair value gap. And as price come into that PD array, it's going up, going up, going up, and we are right here. Then it goes to this fair value gap. Actually, it reaches this fair value gap with a big displacement and a fair value gap. Now, a lot of people in this case would be afraid to enter, right? And they're going to say, okay, price is coming with a strength to my fair value gap. So I'm not really feeling confident to enter, being scared because I'm going to lose some money here. But the reality of this is really the opposite. It's totally the opposite of what you're thinking right here. And we're actually going to discuss this in details. But then I want to show you one thing here that I just called in the Discord and we made money off, right? So we had this main draw in liquidity, which is previous day low. And what happened, and there is also actually a fair value gap on the 4 hour, just around here, I guess. We're going to check it later, but around here. Now, the thing is, this is previous day low in euro dollar, and we're sitting right here. What happened is that as we're coming into that draw in liquidity that is right here, what happened is we created a fair value gap. Now, just take it from me, those types of fair value gaps. So any fair value gap, and this is totally the opposite because there is something that's going to happen here. If it happens, it's going to change this to a manipulation fair value gap. This is not going to be a valid fair value gap. But take a look at this. We have a major draw in liquidity not taken, and price is really close to that draw in liquidity. Price is going to ignore any fair value gap on this price action leg, any fair value gaps above here, and it's only going to go to one single fair value gap, which is the nearest valid one. This is the nearest fair value gap. What happened, and I'll share a picture with you where, or a screenshot that I said price is going to come here and go lower. And that's exactly what happened. Now, in different situations, again, this is not going to be valid, and I'll explain why. But if you wanted a fair value gap and draw in liquidity trading model based on those two concepts, then it's going to be like this. We have this, let's say prices coming lower, creating a fair value gap on this price action leg. We have a main draw in liquidity that is right here. This nearest fair value gap, because it's not really valid for price to go up, all the way to the extreme fair value gap, as a lot of people understand it this way. It's always the extreme fair value gap, but it's not going to be valid because you see how much of price action or how much momentum we're spending on this just to go to this fair value gap and go lower, where we can actually just go to the nearest fair value gap, which is this one. That's still a fair value. Then go lower here. That's one of the perfect models that you're going to see. It could be either a mitigation of fair value gap, or it could also be what? So it could be something like this. Sweep our liquidity into that main drawn liquidity. You see? So just last sweep before reaching that drawn liquidity. Now, what this tells us is that, okay, fair value gap, this one right here, is valid as long as this drawn liquidity is not hit yet, right? Now, totally the opposite. And that's what I'm going to explain that, okay, you really want price to come to your point of interest aggressively. And there's a reason behind it, and I'll explain why. So do not be afraid from this day to take your trades when prices come into your fair value gap or your PD array or your POI aggressively, right? And the reason is, now let's say that we have fair value gap here. Price created another fair value gap that is bullish. A lot of people who are not seeing this higher time frame POI, which is the valid one, which is the one that we need to follow, then what they're going to do is enter from this fair value gap. And you know that there are different people, which means different types of entries. There are people who enter of the reaction. There are people who go limit orders here. So different types of people. In the end, we know that there are a lot of orders here. So a lot of buy orders being around this level. So what's gonna happen is as price coming lower, a lot of people are gonna enter here, maybe a small reaction, and what's gonna happen is another fair value gap on the other direction. So there is this fair value gap that is when price reaching a higher time frame POI, it's not valid, it's a manipulation fair value gap. And most of the time, we're going to create another fair value gap on the other side, and this is not valid. This is only used. Imagine that you are actually planning to sell big amount of money here, or you have a lot of orders that you want to sell. As prices going up, you need something to convince people to go long here in order to mitigate and fill all your orders. And what is one of the easiest way to actually manipulate people? It's creating a fair value gap, because not everyone knows how to use a fair value gap. Not everyone knows or check the higher time frame. So there are a lot of people who create liquidity, and those are the ones. So in short, when we have a fair value gap that is created as price is reaching a valid high time frame POI, then we know that this is nothing but a manipulation fair value gap, and it doesn't need to make us scared of entering. Now, this is what's going to happen. We're going to have another fair value gap on the other direction. That's the one you want to trade, because we always want to trade with the direction. Now, this could be applicable on what? Also on liquidity sweep. So you could see something like this, right? Let's say price going here, sweeping that liquidity. There you go. There is a fair value gap that is right here. If we don't go to that fair value gap before taking that liquidity level, it's not valid. So as we took that liquidity, this is now manipulation fair value gap, which is going to be inverse, maybe give a reaction, very small one, but then eventually it's going to get inverse. And we could create another fair value gap here or one here. Either of those is valid. We want to trade with the trend and not against, because you're going to see the examples that I'm going to show you. It's always about displacement. It's always about liquidity. Now, taking a look at Euro USD, 15 minutes. What do you see here? Want to spot any liquidity level and a fair value gap that happened on the other direction that is going to actually manipulate a lot of people. So what we see here is, let's say, for example, there is this liquidity sweep, but there is no fair value gap on this side. Now, if you switch to another time frame, you're going to see them, but not in this time frame. Now, let's take a look at this. We had in this leg right here, we had a liquidity sweep, and as the price is going up, take a look at the aggression and take a look at the displacement that was caused in order to take that liquidity level, which actually induced a lot of people to enter. You see this fair value gap? A lot of people who are not aware of nothing, not aware of this liquidity sweep, not aware of the the order flow. What happened is they saw this fair value gap, entered from here, or had a buy limit. But what happened after is inversion of that fair value gap, because this is not valid no more. And why? Because of this liquidity sweep. Now take a look at this. We had what? We had this fair value gap here that is created on this direction, and that's the one that was respected. Now, usually I wouldn't want to wait this much of time in order to take my trade, but I'm just giving you this as an example. You could have executed this on the inverse, because we inversed this fair value gap right here, and we started going lower. Now take a look at this. Always look for the sweep in order to validate a fair value gap. Now again, the same logic is a fair value gap that is valid. And what happened here is that price action was going to that POI aggressively, which is going to make a lot of people who don't understand, the real smart money concepts, is that they're going to think that this fair value gap now is bullish. Therefore, the price action is going to be bullish. But this is inducement. This is a trap, and this is a manipulation in order to actually go lower. So in order to be able to go lower, and actually we have two fair value gaps here, consecutive fair value gaps. So you'll be afraid here, but if you're trusting your POI and you know which one to pick, then you know that this is going to be inverse. And that's what happened here, price going lower. So you see, that's a manipulation. That's a real FVG. Now, the same thing here, taking a look at the same fair value gap here, this one here, it was not filled fully. Price came back to it another time and actually come into this order block. So all of this is an inducement, as price was not able to actually push higher. So this is a major inducement right now. So you see, as price come into that inducement, what happened is taking that level of liquidity that is right here, go into the order block and filling the rest of the fair value gap. What happened is actually creating two consecutive fair value gaps. The same thing. This is nothing again but an inducement. It's a manipulation. You see, as price is coming lower here, people were actually able to enter, going up, not much profit, and then disrespected, because this is only being there and only being created only for one reason, which is manipulating people. Now this happen all the time, and it should be only when price taking the major draw in liquidity. Now, the reason that I'm posting this video and making this video for you is for only one thing. That is to avoid the manipulation fair value gap. And how to do that? There is a simple trick that I've talked about before, and I'm still going to mention today because it's really important. In one of my videos, I've talked about the importance of liquidity sweep and displacement in order to determine the direction. So you see, no displacement above a point, it means that we're going lower, and mostly to the low that created that high. And the opposite is also true. So no displacement below a low also tells you that we're going higher and most likely taking that high that created that low. For example, you can see that we're not able to displace below this low, and this low was created by this high, and now we're taking that high. So what you see here is also taking that high, not displacing above. Price coming lower. There was another sweep until we take that low eventually. There was also this low that is responsible for this high, and that's what happened. So applying this rule, and you see it always happen all the time. So in order to apply this rule, we only validate fair value gaps after break a structure, a clear one with a displacement. However, if there is only a sweep, mostly a wick, then we don't take that fair value gap. For example, we can see that we're actually going lower, lower, and we only sweep this low, and there was actually a fair value gap here, and there's only a sweep here. I'm not gonna take this one because mostly it's gonna be inverse. Okay, that's what we need to understand from this video. That's all you need. Those fair value gaps right here are nothing but a trap. On the other hand, if we're not taking that low yet, so let's say the major drawn liquidity is here, and we're getting very close to that drawn liquidity, and we created a fair value gap here. And even if there is a fair value gap all the way up, sometime it depends if we're in a kill zone, if there is news. Most of the time, price is going to come to this nearest FVG and then go lower. And it's not going to be a manipulation fair value gap. Unless we took that low and we were not able to displace below it, then that's going to be a manipulation fair value gap. That's the thing. That's all I wanted to mention in this video, because there are a lot of people who actually make those mistakes. People that just seeing that, okay, we have a fair value gap here, it means we're going to push higher, right? But they don't see that there was a liquidity sweep here. And the same thing happened over and over everywhere. You see, you got to look at not only fair value gaps, but what happened after creating the fair value gap. So not only the fair value gap, especially right here, you see, we're not only looking at the fair value gap, we're looking at what happened after the fair value gap. You see this big wick taking that high into an order block. It's telling me that we don't need to actually long this one. And that's why there are some people who only follow, especially people who are using indicators. The indicators shows all fair value gaps. There is no discretion in it. There is no experience involved. So that's the mistake that they're doing. So from today, you got to look at what happened after the fair value gap. That's the rule that we're going to follow. Actually, that's it for the video. A short video today, but a big lesson to learn. If you like this type of content, then make sure to like, subscribe, and share this video with your friends. You might help someone that is making this mistake. This is Molham, and I'll see you in the next video.